It's John here with another tax saving tip for you. It seems like we've only just finished last year's tax returns and now another tax year end's creeping upon us. It's only 1 month away. So what can you do before 5th of April 2016 to cut your tax bill? Well, here are our Super 6 strategies for you. So here goes. Number 1 is pensions. You can invest up to £40,000 in a pension in the year to 5th of April 2016 and get tax relief from the government. If you're a basic rate taxpayer, what this means is that the government will put £25 into your pension for every £100 you put in yourself. If you're 40% taxpayer, this rises to £67 from the government, and if you're 45% taxpayer, it's £82. Now, if you haven't put anything in for the past few years, you can still actually use the tax-free allowances for the last 3 years, as well as this year. As the allowance is £50,000 per year until 5th of April 14, you could invest up to £180,000 in a pension and claim tax relief on it. Just about that's £50,000 for 2013, £50,000 for 2014, and then £40,000 for each of the years 15 and 16. If you're 45% taxpayer, that means paying only £99,500 to get £180,000 into your pension. And for everyone, don't forget the kids. You can actually invest £2,880 per year into your kids' pensions, and the government will add £720 for each child. This is also true if your husband or wife isn't earning, do the same for them and get tax relief. But on pensions though, it's worth noting there are major changes coming in April 16, so it's definitely worth speaking to an independent financial advisor and getting some detailed advice on this. Our second strategy is ISAs. One of the quickest and easiest ways to save tax on your investments is to use your individual savings account or ISA annual allowance. All interest, income and profit on selling an ISA are tax-free, so it's a really tax-efficient way of saving. Adults can save up to £15,240 in an ISA each year, and this is the highest it's ever been. And once again, don't forget the kids. You can put up to £4,080 into a junior ISA this year for each of your children. So a family of 4 can invest up to £38,640 in ISAs and get all of the related income tax-free. There are also help to buy ISAs available to help you get on the property ladder, which is kind of new. So again, it is worth speaking to an independent financial advisor to find the best ISA for you. A third strategy this year is capital gains tax. You get an annual allowance, tax-free exemption of $11,100 on any capital gains that you make, and that's kind of the profit you make on selling any of your assets. It could, for example, be the profit on a rental property or the profit on some investments you've sold. Therefore, it's worth thinking about the timing of any sales. If you're thinking of selling something soon but haven't used this year's exemption, it might be worth doing that before the 5th of April to use your full £11,100 tax-free allowance, because once it's gone, you can't carry this forward. You could also think about transferring some of your assets to your husband or wife to use up both exemptions. Otherwise, you could end up paying capital gains tax, which is either 18% or 28%, depending on your other income. Our fourth strategy is child benefit. If you do receive child benefit and either you or your partner earns more than £50,000 in a tax year, you'll have to pay some of it back. If either of you earn more than £60,000, you have to pay all of it back. For a family with 2 children, this can be worth nearly £1,800 over a year in child benefits that you'll lose. So if you think you are above the threshold, there are a few things you can do before the 5th of April to protect that child benefit. For example, pension contributions or charitable contributions are actually deducted from your income when working out what you've earned for child benefit purposes. So a charitable contribution or a pension contribution before the 5th of April could bring the income down and keep that child benefit. Now, our fifth strategy is about avoiding the new dividend tax. There's a new tax on dividends comes in April 16, and it adds an additional 7.5% onto the tax on most dividends. Therefore, if you've got profits in your company, it could be worth declaring dividends before 5th of April. We have got another video on that you can take a look at, which goes into the detail. 6 strategies, it's all in the timing. If you own your own company particularly, you can choose the timing of any dividends, bonuses or salaries, and therefore it's worth keeping an eye on whether you're near any of the main thresholds and deciding whether the money is best paid out in this year or in next year. The main thresholds of annual income for standard adults this year are £10,600 is where is the amount you can earn tax-free, personal tax-free allowance. when you hit £42,385, you become a 40% taxpayer. As I mentioned earlier, £50,000 you start to lose your child benefit, and about £60,000 you lose all of it. Then £100,000 of income, you start to lose your personal tax-free allowance, and then £150,000 you become a 45% taxpayer. So basically you take this into account, and also take into account your husband or wife again, or any children, because they might have some allowances you can use by paying into them instead of you. So you might think of transferring assets or shares so that they get the relevant income if you're about to hit one of those thresholds. So, in summary, I hope you found that really useful. If you did, please share it on Facebook, Twitter or Google+. And if you'd like more tips, please do subscribe to the channel. And if you'd like a chat, please get in touch using the details below. See you soon.